Very good evening from London. So we have just seen the first of the three major central bank announcements this week. The Fed in the US keeping everything close to their chest, announcing nothing new in terms of measures, reiterating that they will keep the Fed's funds rate low until 2014. Some had hoped for today some extension of that time frame up until 2015, but nothing from the Fed here. Also reaffirming that they will act if there is further deterioration in the US economy. At the moment though, the Fed very much in wait and see mode. So in the fast money moves on the back of that, we saw weakness in equities, weakness in spot gold, and some definite flows into the US dollar. We saw fresh lows in the euro dollar and cable currency pairs as the dollar was the dominant mover in the aftermath of the FOMC rate decision. Also T-notes with no further forecast of bond buying moving to the downside there. All the fast money moves were generally quickly paired in some volatile trading, but this is very much as to be expected really from the Fed. They will have at the next meeting 2 employment reports, and so they will be waiting also to see what the ECB do tomorrow. Elsewhere in trade today we saw drawdowns across the DOE crude oil inventories report in the headline and in the gasoline and distillate inventories, and we have seen some strength in the oil markets headed in toward the NYMEX pit close, also coinciding with the come off of the initial lows following the Fed decision. The energy complex as a whole has been pretty strong in trade following those DOE numbers. Also in terms of the ADP employment number coming in significantly above expectations today at 163 against the expected 120. And that bodes well for the non-farm payrolls release on Friday. But it's worth noting in the ISM report and the Chicago PMI report yesterday, the employment index is coming off and falling below the previous figures. So something to be aware of. And with the average over the last couple of ADP employment reports showing a disparity compared to non-farm payrolls approximately 70,000. The consensus for non-farms at the moment around 100,000. So something to run through as we head towards that key non-farm payrolls report on Friday. But as previously mentioned, all eyes now on the ECB tomorrow, where we are expecting some definite actions out of the President Draghi, who has promised or has hinted to do so in his comments last week. But that's enough from me. Hope you've had a good trading day, trading the FOMC, and we'll keep you updated bright and early from the start tomorrow morning at 6:30 London time. Thank you.